Most momentum indicators lie to you about signal strength. They show bullish momentum when there's barely any buying pressure behind the move. Look at this trade right here. Traditional indicators showed perfect momentum, but when I checked this insanely accurate tool I'm about to reveal, it showed only 23% true momentum strength. And in this video, I'm going to show you exactly how to read real momentum strength and give you strategies to predict buy-sell signals with insane accuracy. Let's get into it. First, head over to TradingView and pull up any market you want. I'm using the 15-minute time frame on GBPJPY, but this works on any time frame, any market. Click on indicators and type in Bollinger Momentum Deviation. Make sure you select the one by Quant Edge B. Now, while most momentum tools use simple calculations that can't adapt to changing market conditions, the Bollinger Momentum Deviation uses a sophisticated normalized SMA with dual standard deviation filtering. What makes this indicator insanely accurate is its adaptive normalization mechanism. It takes momentum readings and normalizes them within a volatility-adjusted range, so you get consistent signal reliability across different assets and time frames. When you take a closer look, you'll see the main oscillator line moving between key threshold levels at 83 and 60. Now, when the oscillator crosses above 83, it confirms strong upward momentum with institutional backing. But when it crosses below 60, it confirms downward momentum with serious selling pressure. But that's not all. The indicator also shows extreme zones above 130 and below -10. These zones identify overbought and oversold conditions in ranging markets, giving you precise reversal opportunities. This dual functionality makes it incredibly accurate in any market condition. Now, to get accurate signals from this indicator, let's get your settings right. Double-click on the indicator to access the settings panel. Set your base length to 40, as this controls the foundation SMA calculation period and provides the ideal balance between responsiveness and noise filtering. For standard deviation length, I recommend you use 50, as this controls the volatility filter strength and ensures the normalization adapts properly to market conditions. Next, keep the SD multiplier at 0.7 to prevent false signals during choppy conditions. The long threshold should stay at 83, but set the short threshold at 60. Finally, enable the backtest mode to see historical performance metrics, like profit factor, win rate, and drawdown statistics, so you can validate the indicator's effectiveness. Most traders struggle because they rely on random signals without a clear system. That's why we focus on structured strategies and automation, so you can study how these tools work step by step without guesswork or emotions. If you want to learn more and see exactly how these strategies are applied in real market conditions, click the first link in the description. In trending markets, first, identify the overall trend using higher time frame analysis or simple moving averages. In uptrends, wait for the BMD to cross above the 83 threshold. This confirms that upward momentum has reached levels with real buying pressure behind the move. Then, enter your long position when the oscillator crosses above 83 with confirmation that the trend strength percentage is at least 60% and rising. This validates that smart money is supporting the directional move. And as long as the BMD remains above 83 and shows consistent momentum readings, you want to stay in the trade. Only exit when the oscillator drops back below 83 or shows bearish divergence against price. For downtrends, wait for the BMD to cross below 60, a confirmation that there's downward momentum with institutional selling pressure. Enter short positions when the oscillator breaks below 60. Set your stop loss based on the recent swing points and target at least 1.5 times your risk. This approach catches the strongest institutional moves while avoiding the noise. In ranging markets, the BMD transforms into a powerful mean reversion tool using its extreme overbought and oversold zones. Now, when the oscillator crosses above 130, it signals extreme overbought conditions where price has stretched too far from fair value. This is your signal to take profits on long positions or prepare for short entries. Wait for the oscillator to peak above 130 and start declining before entering short positions, a confirmation that the extreme buying pressure is exhausting and smart money is starting to take profits. For oversold conditions, watch for the BMD to drop below -10. Enter long positions when the oscillator bounces back above -10 with confirmation from volume or candlestick patterns. The key to mean reversion success is patience. Make sure to wait for the extreme readings and let the mathematics confirm the reversal, and set tight stops just beyond the extreme levels. Before I show you the next strategy, remember this: learning indicators is one thing, but applying them within a structured process is what really matters. That's exactly why we've created a place where you can review these strategies, see live examples, and study them in real market conditions. Just click the first link in the description whenever you're ready to explore further. Now, different markets require different settings for accurate signals. For forex pairs, set base length to 45 and SD length to 55. Forex markets have unique volatility patterns during session overlaps, that require slightly longer calculation periods. Use long threshold at 85 and short threshold at 58 for major pairs to filter out session manipulation. For crypto, reduce base length to 35 and SD length to 45. Crypto moves faster and more violently, so shorter periods capture the relevant momentum shifts. Keep thresholds at default, but watch for extreme readings above 140 and below -15. For stocks, bump the base length to 50 and SD length to 60. Stocks trend more consistently, so longer periods provide more stable momentum readings. Adjust thresholds to 80 and 65 for cleaner signals during earnings seasons. For gold, use base length 42 and SD length 52 with thresholds at 88 and 55. Gold's unique volatility characteristics require fine-tuned parameters for optimal performance. Thanks for watching, and I'll see you in the next one.